This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices quite a bit lower this morning. The main reason for the weakness today is the report showing that China's manufacturing appears to be slowing. In fact, we had the Chinese Purchasing Managers Index falling for the first time in 6 months. So that is the dominant factor in the financial markets today, especially in stock index futures. However, we do feel that with all of the accommodation in the banking system, not just here in the U.S., but globally, that this break will only be temporary. In fact, I'm thinking that we will probably see recovery from here, from these lower levels today. Still thinking within the next couple of weeks we can see some new highs for the S&P and the Dow. In the currency markets, seeing good gains in the euro currency. In fact, the euro currency about 110 higher. This after a report showing factory orders in the Eurozone increasing in January more than expected. We would expect further gains in the euro currency. Over the pound, we do have some new highs there, 2.5-year highs for the pound against the US dollar. This due to more talk of the possibility that the Bank of England could increase interest rates sooner than anticipated. Of course, higher interest rates is bullish for the pound from an interest rate differential point of view. In the Japanese yen, trading higher. Some talk that the Bank of Japan may hold off on any additional quantitative easing. However, my feeling is that they will not be able to hold off, that they will add more accommodation to the banking system, especially when their new value-added tax increase comes into play in April. I think that will slow the economy, and there will be more reason for more stimulus, and that would be bearish for the yen from an interest rate differential point of view. Australian dollar trading lower today after some good gains yesterday. Strength yesterday linked to better than anticipated or stronger than anticipated inflation numbers, but all of those gains given back this morning on very little news. So we continue to remain bearish on the Australian dollar, still looking for 85 cents as the next downside target. Over the interest rate markets, seeing higher prices. Of course, higher prices linked to the Chinese PMI number that did come in very weak. We are getting up to some very critical resistance areas in the March bonds at 132.08, and I think that is an area that will hold this market. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
So